Who's got at least one idea worth money to them this weekend? At least one idea. I think if you sat through this event and only got one idea, you're probably ripping yourself off. Is that true? Who's got at least a dozen ideas? Okay. Who's got lots of action things to take advantage of? Because what I want you to think about is what is the monetary value of this information. Now, obviously, that will depend upon your I guess, intelligence, so to speak, and Albert Einstein's definition of intelligence, ability to entertain a new idea, and then what I added to that, action and idea. But also it depends on where you're at now in your business. But what I was teaching you this weekend was like not just about your current business or the business you're thinking about. This event is about teaching you to be an entrepreneur or an entrepreneurial manager. So for the rest of your future, you can take charge and use this knowledge, this skill set to create great businesses or grow great businesses if you're working for them. And then you think, what is that worth to you? Not only just in the next 12 months, but the next 5 years, 10 years, 20 years as a career. And if you had to put a dollar amount on that, I know, my wish was when I was starting out 15 years ago, or even when I was starting out when I was 21, 20 or 18 years ago, and my first company, that I would have loved this information then. I mean, because imagine what it would have been worth to me. I had to learn it the hard way over time, but then to be able to learn this upfront, it's just invaluable, I think. Certainly I'd see it for myself. But also we talked about yesterday the freemium model. We're going through a lot of examples of companies that are basically taking over market share and dominating a new market by doing nothing other than going, how can I give my product away for free? Who remembers that? Okay, and just that strategy alone, you think about the future, how powerful that is, and should get you thinking. It got me thinking a lot as well. Some of my business partners here as well, they got them thinking, go, my God, how much opportunity is out there in the world for an entrepreneur that has the skill set but can at least take the time to think and go, my God, look at industries and be a serial entrepreneur and look at opportunities and how you can exploit them with this knowledge. It's not just about your business now, but it's about what you can do or what your business can become. Because the question was, what business are you in really? Make sense? And we start to think about those things. So there's a lot of distinctions that we've went through. All I'm going to do here, I'm going to wrap up. We're going to do this in less than an hour. I'm going to teach you, if you want, of course, how to become a billionaire. Is anyone interested in knowing how to become a billionaire? Okay, I just wanted to check that we can. Now, I can teach this fairly quickly, and it's very powerful. I'll teach you for a couple of reasons. I'm not saying, okay, you're necessarily going to become a billionaire. Some of you could take this information, and once again, we're just modeling what billionaires have done. Let's break that down and achieve maybe billionaire status. It is certainly much more possible these days. But if you could only achieve a fraction of it, who'd be happy to achieve just 1% of billionaire status? That's what we're looking at. How do you model that and apply it on a small scale? And I'll give you some examples of our 21st century members. One I mentioned the other day was sitting in the front row of a seminar, 19 years of age, just about 8 years ago. He took these ideas and he turned it into $10 million, which then went to $25 million in his 20s. So another 21st century member used this concept to make $250,000 in 12 months. Okay, on a smaller scale. So there's variance of what is possible with this. So also, some of you are investors as well. So when you understand this concept, it makes you a better investor because you're seeing how billionaires make their money and how 99% of them do it. So I think it's very valuable. It's very rarely taught in any seminar that I know as far as what that actual strategy is. So it's very valuable to you. And once again, all we're doing is modeling and then applying that to what we can do to improve our results. Okay, so I'm going to run through that with you. Then I'll also open up for any questions. Some of you may still have questions. You've had a whole host of speakers. There's a couple that couldn't make it here today. Jack Deloso was going to speak about capital raising, exit strategies. So we're going to see if we can get some information from him to send out to you. I was speaking to Aj today. Some of you heard Aj speak, one of my accountants last night. And he's going to send through a PDF some extra information for you, so we'll get that out to you as well, so you can learn a bit as far as different things that you would need in your business, etc. So that's a gift that he'll send through to you as well. So lots to learn. I think what's important is capping what I want you to jot down now. Okay, what's a couple of best things you've learnt so far this weekend? And I want you to put a dollar amount next to it and say, the information I've learnt, the ideas I've learned over the last 3 days, Jamie, I want you to write down a dollar amount and say, what is this worth to you? Monetary terms in the next 12 months. So put that figure for the next 12 months. What do you think you can turn this into dollar-wise? Make or save? Some of you will make more money. Some of you will just go through your companies and save. And then what is it worth to you in the next decade? Those two figures. The next 12 months, what are these ideas worth to you? Put a dollar figure down. And then the next decade, what is this worth to you? Not just in your existing businesses or the company you work for, but the potential if you see what you can do with this information. Okay? And then share that with the person next to you. Go for it quickly. Okay, class, stretch up nice and high. To the side, big moan. And the other side, big moan. Leaning back, cash flow moan. Okay, I want to say a couple of people. What's it been worth to you and what's maybe some action steps you're committed to taking? Just big voice, we'll bring a microphone. Who wants to share what's some dollar figures this has been worth to you and ideas and action steps? Yeah, we'll start over here. Far away.
Joint venture, a lot of the stuff that was said today about the joint venture, I reckon I can apply that and approach a company that's got the same database, similar database. And I reckon that's about 500, 700 clients, which will come about $420,000.
So about 420,000 just from the one idea of a joint venture with one potential party. Yeah, give them a hand. And remember we talked about the Parthenon. Joint venture is just one of many legs you can add. You think if you start applying and building this to your business, all the additional legs, not to mention all the different potential JV partners. Once you do a successful one with one, you can use that as a reference to go to other potential partners. And also you can do paid for JVs we talked about yesterday, where you can pay for your offer to go out to lists, okay, with email blasts, etc. If you've got a business, you can even do that with us, with 20th Century Media. You can pay and they'll send it out to subscriber lists of Wealth Creator Magazine and other lists, etc. So that's a shortcut to get a JV. Other times it takes a bit more work to do one, but heaps of companies want to grow their profits. And we looked at the marketing funnel, back-end products. Often you'll make more money by selling other people's products than your own. That's good. Who else wants to share what's an idea you're going to action or dollar amount that has been worth to you? Who's sharing? Yeah, we'll go down the front here.
Thank you. Just to fill the gap, seeing no one put up their hand. Sorry, I'm putting my mind out. I'd say that the idea of belief systems and the development of psychology beyond anything else is certainly the most important point for me. And I like looking at the 80-20. I was just saying to Lisa beside me, I'd like to think that I've developed 75% of my 80% of psychology. Okay, that's quite a high percentage, but if I could, determine the last 5 through developing, the idea of really strong self-beliefs, I believe that would be worth $100 million to me.
Wow, that's amazing. Give him a hand. You certainly think what's possible with these businesses. I know when I was starting out 15 years ago, and I didn't have access to this information all then, but learning as we go. But it's definitely now I think, what it's worth for me is starting to learning these ideas and applying to my business career, how much it's worth, but what it's already been worth. Down the back, yep, hear from him. What's it been worth to you so far, and what action steps?
I'm the same. I thought I'd just take the mic. I'm still sort of rattling in my head exactly how it's all going to come together. But it's definitely around free health and fitness education for the corporate market in the city. When it comes to fun runs and all that sort of thing, just giving all that away with the idea of really ideally, I'll make my money from one-on-one trainings, so I'll recruit like mass personal trainers, but actually, but doing the free thing of going out there, getting people ready, like maybe the boot camp's free or something like that, getting people in, getting corporates, getting all the Mother's Day classics and everything like that, putting it all out there free for training.
So you get the scalability, top of the funnel filled, and then the back end being the more one-on-one training.
Yeah, that's right. I'm still not sure exactly, but it's all coming.
Yeah, and once again, what's he got to do? He's got to formulate. He's got to then test and measure. Does it make sense? On a small scale, test and measure. Also, what you can do is look for a model. Okay? If all you get out of this weekend is go, some of you should be flying to the States or jumping on Google and looking what's going on in the States or other countries, often where it's ahead of the trend, where things are working, like the Bunnings story, like Home Depot, Bunnings, okay? Groupon. Yeah, my friend's company, he set up $50 million company, online discount website. So that's what we also look at. So it could be models over in America or even in Australia that have successfully done similar things, and that's where you're looking. That's the shortcut, remember? That's what you're looking for. Get to say something's already been done before, model it, and then make it better, etc., or different. And that can make you millions. That's what I would be doing. I'd be going, okay, go on Google and say, okay, what other models are there out there? That way you don't have to guess. Like Bunnings didn't have to guess and hope this works. I mean, how are you going to get investors on board if you hope it works? They want a sense of certainty. They're going to look for a model. My friend was able to raise a lot of money, and his company's now worth 50 million. He's taken 2 years to do that. He was able to raise a lot of money because Groupon, successful model. So say this is what's been achieved in these markets. We can do something similar here. If we're only a fraction of the success they've had, investors like that. A lot of you don't even need investors because using the internet model is not even high cost. Okay, but if you need investors, you have but even for your plan, you want to have a sense of certainty. So you test and measure, look at models, and speed it up. That way, you don't waste a lot of time as an entrepreneur on things that may not work, or waste all this time on an idea when really what you want to be doing is getting into action and test it as quickly as possible. What I want to do, if I get a new business idea, I want to test it as quickly as possible. Will it work? If it's going to work, then I'll devote my time and resources to it. Otherwise, I'm not going to waste my time. Okay. So you want to know that quickly because there's so many opportunities out there. You don't want to waste something you spend 2 years on that doesn't work out for whatever reason. Make sense? Yeah, very good. Give him a hand. And this is where you start to get those ideas of creativity as an entrepreneur. They'll just come to you, and then you just get better. And once you have success in something once, okay, the key then is just replicate. I mean, all Virgin models, we look at Richard Branson, he's had a successful model. Okay, his business strategy is very simple. You ask Richard and he'll say, okay, well, look, we look for industries that are ideally a duopoly, where the large companies are overcharging, providing poor service, that we believe we can go into that market, undercut them on price, provide a unique or better service, and still make a profit. That's his rules. That's what we're looking for. So how many industries in the world is there like that? A lot, okay? So then they think they can make money out of it and provide a better choice for customers, they'll go into that. Okay, that's his strategy. It's worked once, he just replicates it over and over again and built 8 separate billion-dollar companies. Okay, 400 individual companies. And statistics are most of his companies have failed. You say, well, but that's how he's had the success of the ones that have succeeded, making sense? And even the ones that have failed, he still made money out of. You look at something like Virgin Money with the Virgin credit card that was done a deal with Westpac some years ago, 600,000 applicants. That deal didn't end up working long term. They weren't happy with each other as a partner. So he ended up selling out of that business for $38 million. Now, for Richard Branson, $38 million is a small deal, very small deal. He was used to selling businesses for hundreds or billions, making sense? But who'd still be happy with a $38 million deal for a business that didn't quite work out the way you want it to do, okay? But that was the power of those things. So that's what you've got to start thinking of what is possible, the scalability. So let's go through this quickly and run this through because I know it's been a very huge 3 days for you guys, probably perhaps more than you expected in what's possible in business and the way that the world's changed. So how to become a billionaire. It's ironic, when I first wanted to become a self-made millionaire, what I did is I put the intention out there, I want to become a millionaire. And as a result of that, when the student's ready, who usually appears? The teacher. So some people say, well, Jamie, how did you find your first millionaire mentor? I said, well, I grew up in New South Wales. I was living in Sydney at the time. And I was very fortunate because in New South Wales, they have this particular program. And what I got a knock on the door one day, I was sleeping on my friend's couch, and I got a knock on the door, and it was a local multi-millionaire. And he said, Jamie, I heard you want to become a self-made millionaire. I'm your local multi-millionaire. I'm here to give you some free coaching. Do you have that program in Victoria? You don't have that program? Speak to your government, okay? So that's not exactly what happened. No, I had to go out and seek a mentor. And a friend, what happened, I put the intention out there. Because first of all, what I did is I put my hand up and said, I need some what? Help. Up until then, I was trying to do everything myself. Big mistake. Trying to do it all myself, carrying the weight of the world on my shoulders and all my problems and the business. And I wasn't asking for help. And 2, so by asking for help was one of the keys of becoming successful. Always ask for help. Never assume you know everything, okay? Because you don't and you won't, and there's always people that will help. Generally, the more successful someone is, the more willing they're willing to help you on the condition they know you're not just talking the talk, you walk the walk, you're actually committed. Because busy people, successful people don't like their time wasted, and they'll suss you out, okay? Because there's lots of people talk. Yeah, if I won lotto, this is what I would do. Okay, if I was rich, I'd do this. Like everyone says they can do things, but it's whether they actually do is a different story. Okay, so as a result of that, I went off and I found a mentor because a friend of mine said he just started working for this company. He said, you've got to meet this guy. He's a multi-millionaire, and I know you've been looking for a mentor. It's a really cool company we're working. It was a group of companies. As a result of that, that led, and I shared my story on the first day, how I ended up becoming an entrepreneurial manager in some of his companies, and I served my millionaire apprenticeship. So some years ago, I put an intention out there. I'd never met a billionaire, and I wanted to take my level of business and my investment to another level. So ironically, I'd never met a billionaire, but this was about 5 or 6 years ago. In the space of 18 months, 5 to 6 billionaires come into my life. Isn't it amazing? When the student's ready, the teacher appears. One of those, I end up meeting Richard Branson, obviously. I've met him 3 or 4 times. But other people that are private billionaires, in most cases, you wouldn't know who they are. And one of the first billionaires that I met, he didn't even speak English. It was through a translator. One of my best friends worked for his companies as a foreign billionaire. And I was in Sydney having a meeting, and the interesting thing, he asked me this question via the translator. He said, Jamie, on your current strategy, they'd heard about me, what I'd been up to, and we're looking at potentially doing some business together. On your current strategy, how long would it take you to become a billionaire? And the question caught me off guard because guess what? I never actually thought about being a billionaire. To me, it was like too pie in the sky or not realistic or never actually really thought about it. So I said, I don't really know, probably 15, 20, 30 years, if ever. He said, why don't you do it in 3? I said, why don't you take more drugs? No, I didn't say that because maybe it wouldn't translate quite well. But no, but if this guy he'd become a billionaire in less than 10 years. So if he hadn't been a billionaire, then I'd just dismiss it. But the fact he had, now what he was saying, he's not saying you can do it in 3, he's saying, well, why can't you? What is possible? His belief systems was more expansive. I mean, if you become a billionaire, you've probably got more expensive belief systems. That's how you become a billionaire. Making sense? So his level of thinking, the difference between me being a multi-millionaire at the time, and the reason I'd done that at a fairly young age, him being maybe less than 10 years older than me, being a billionaire, was that his thinking was more expansive. True, he'd done it in an emerging market, so different rules, different opportunity, and things tend to happen faster, but he'd still gone out and done that. So I listened to that, but what it did was plant a seed. I planted a seed, I started thinking, if I was a billionaire, how would I have done it? It's an interesting question. If you're not a millionaire yet, ask that question. If I was a millionaire, how would I have done it? Okay, to be a billionaire, what would be required? Now, what started to happen is I started to look, and because I wasn't necessarily focused on whether I wanted to be a billionaire, but I wanted to take my level of financial success to another level. Because you get complacent, you get comfortable, but there's always another level. Is that true? I don't care who you are, if you're Jamie Packer sitting in this room, there's always another level. Lachlan Murdoch, there's always another level of what you can achieve. So as a result of that, what happened is I got to thinking, and just before that, where I was up to is an important point. Got to thinking. Just before that. Yeah, so another level. So anyhow, it started me thinking. So what I started to do, I think information come into my life where I started learning how people create a lot of wealth. So and during that process, I met some people had taken companies public and had made people a lot of money, hundreds of millions of dollars. And so I started to learn. So I actually learned what it would take to become a billionaire. Okay, so you got to know the strategy and understand that. So at least I knew what it would take and what the time requirements would be, etc. And that became valuable information. And I started to play the game at a higher level. So the question I have for you: who's one of the richest people on the planet? Warren Buffett, Bill Gates. Okay, let's say Bill Gates. What makes, because I'm going to teach you how to become a billionaire. I'm going to teach you right now. What makes Bill Gates worth $60-odd billion? What's made him a billionaire? Systems obviously helped. Yep. Yeah, he's an innovator, yep. Yeah, it wasn't his idea, but he took MS-DOS and made it very successful. Yep. All those things are true, but a couple of years said it. It's beliefs, obviously, is much more expensive. But all these things contributing to becoming a billionaire. But if we say what specifically makes him worth most of his money, sure, you could say, well, Jamie, he earns a lot of income. That's why he's rich. Okay. He's become rich because the shares he owns in Microsoft is the majority of his $60 billion in wealth. Okay, makes sense? So what's that got to do with becoming a billionaire? Everything. Nearly all billionaires, jot this down, nearly all billionaires do it by building or a business or buying a business and increasing its value. They'll either increase its value, they'll trade sale it, or they'll list it, or sell part of it generally. That's how they'll make their $1 billion. Make sense? They'll either build a business in most cases, or they will buy a business. Okay, Graham Hart, the richest man in New Zealand, worth about $4 billion. What he is good at, he'll go in and buy businesses like Goodman Fielder, bakery company, etc., and add value to them, which you use entrepreneurial skills, increase its value, then sell it off, or sell parts of it off, or sell parts of its assets off, and make billions of dollars. He is what's called, jot this down, a financial engineer. So people operating at this level are financial engineers. And so, well, Jamie, that's really exciting for people that are billionaires, but what about me? How can I take advantage of what they're doing and increase my net worth? Well, that's what I'm about to show you. So most billionaires make it by buying or building a business. Fair enough. Now, Kerwin would have spoke to you before today, and he would have said, and he would say that to create wealth, you need to be in business for yourself, which is largely agree, but you need to have the business mentality because you can also work in someone else's business and become wealthy as well, what I've been talking about this weekend, true? Entrepreneurial manager, okay? And a lot of people become very wealthy by that. Look at Steve, is it Steve Allen or Microsoft, second in charge? Yep, Steve Ballmer. I mean, he's a multi-billionaire, and he's built that. He's been an entrepreneurial manager, basically. Does that make sense? He hasn't built his own company. He's worked in that company and been a partner and built that up, okay? You look in Google, there's a lot of people in Google, a lot of people in Facebook, that entrepreneurial managers that have become millionaires or billionaires. So you have to have the business mentality. You have to grow someone else's company or grow your own or buy one. So that's how now there's only one person I know, or there's a couple of people, one person in particular, a Malaysian-born Australian, that become a billionaire without doing it via business. Would you like to know how he did it? And he did it in recent years. He invested $1 million, he's a stock trader, invested $1 million into a particular mining stock. We're going back, I'm guessing 5 to 6 years ago now. A particular mining stock in Australia when it was only worth around 3-5 cents a share. Fortescue, exactly. He invested into Fortescue $1 million. Fortescue went up to $13 at one point. His $1 million turned into $1 billion. Who'd like one trade like that? Okay, is that a good trade? Okay, so not a penny trade anymore. But you say, well, he must have been lucky, or he's already rich if he had $1 million. The point was he'd already backed Andrew Forrester in Anaconda. And those who know the story of Andrew Forrester, who built Fortescue, Anaconda had failed on the stock market. So a lot of people are like, I'm not going to invest with him. He's lost my money, blah, blah, blah. And, Australians really just criticize people. It's like, well, you invest in the stock. No, the challenge in this country, if you have a company and it fails, you treat it like a criminal. But the people that don't mind when they're making money from it, but if it fails, you're a criminal somehow. It's this convict mentality is crazy. Okay, so a lot of people wouldn't touch him. But some other investors said, it wasn't, you don't always succeed. You fail at times. And Andrew Forrester did fail in Anaconda. Didn't make it work the way they wanted to. But his next venture did. And a lot of people didn't think Fortescue would ever get off the ground. It's pie in the sky, will never happen. But look at it now. It went up to $13 a stock. It went back down through the credit cards. It was bouncing back up again. It's a major player in that industry now. And it had to get its money, like a lot of Australian talent, has to go overseas to get recognised. Kylie Minogue, etc., even musical talent. A lot of entrepreneurs will go overseas, raise the money because Australians and little institutional investors didn't want to touch Fortescue. Now they beg to be a part of it, okay, once it's proven. Do you see what I'm saying? Those who are willing to take a risk. So very rare would you going to get a stock trade you make $1 billion out of. Okay, so that's a result. Most of you would have to buy or build a business. Okay, let me give you an example. Here's a company you may remember. ABC was in what business? Childcare centres. You remember ABC? So let me give you an analogy of ABC. ABC was founded by Eddie Groves, who was in the news only a couple of days ago because I think ASIC's going to pursue charges against him. I don't know if it's civil or even criminal charges. So because the company collapsed, so he's under a bit of pressure as well. He lost most of his wealth. Okay. ABC, though, was a company that he founded with childcare centres, and then he decided to list it on the stock market. His wealth went up to about 150 million. He was the youngest under 40 in Australia for some years. Okay, and richest youngest under 40 at one point. So what happened is that he built this company, and then it went public, listed on the stock market, which is a way to create a lot of wealth. And the advisors basically said, you need to grow. Because let's say you bought ABC shares for $1, Bruce, you'd be like, well, you want it to go to $2. You want it to go to $3. So as a result of that, the share price, people want to see growth. You as a retail investor demand growth. So the two ways to grow a business, jot this down. One is through organic growth. The other is through what? Acquisition. Okay? Two ways to grow a business. Acquisition is buy other companies and grow faster. Organic growth is sales, increasing the sales, the profit of the business. Okay? So what they did was they wanted to go out and buy childcare centres. And the bank, two ways to raise money. If you're going to buy businesses, you can use cash, like Apple has heaps of cash. They want to buy a business, just write out a check. Or you borrow from the bank. And before the credit crisis, the banks are throwing money at companies, so they make their money. Or you can use, well, there's many ways, but one other way, common way, is equity. You use your shares in your company to swap to buy business. And that's why the stock market's there. To raise cash for acquisitions, etc., to grow a company, and to be able to use its shares as a form of currency to buy things. So what ABC did, let's say come along and wanted to buy. Now, ABC at one point was trading at almost 20 times its earnings. 20 times, jot that down. Now, I don't know exactly the amount it was, but let's round it down to 20 times. So what that means, you'll hear as an investor, you'll often hear at times earnings, okay, or multiple. These words mean something to you now if you're not an investor. It was trading at 20 times. That means this. If every $1 million ABC was making in profit, it was worth how much? 20 million. Make sense? So I don't know what its market cap got up to. We could probably check it out if we went on the history of ASX. But let's say it was worth $500 million at one point. If it was making, say, well, let's say if it was making 50 million in profit, times that by 20, okay, it would be $1 billion. Make sense? So you're making 50 million in profit, times by 20, you got $1 billion company, if it's valued at 20 times. So here's what they would do. They wanted to buy, so he needed to grow. So the banks were throwing money. Go and buy other businesses if you want to grow fast. That's one way you grow fast. So they went to buy childcare centres. So let's say XYZ was a private company in Melbourne or wherever it was, and it owned 5 childcare centres. And those 5 childcare centres combined were making, say, $1 million in profit. Okay? You probably need more than 5 to make $1 million in profit, but let's say that's what it was. It's a private company. Now, private companies, are they worth more than public companies or less? Less. Why? They're not as liquid. Would you go and if I said, I've got a private company here, I'll sell you shares in it, but 20 times its current earnings. You're not likely to do that for a private company. You're probably not likely to do it for a public company at the moment either. But the average of the stock market trades about 13, 14 times, by the way, earnings. The average of the stock market is 13, 14. That means you buy a stock on average, it'll take 13, 14 years of dividends. If they're paying full dividends, to pay you back for that stock. Make sense? That's how it works. Now, different industries will trade at higher multiple. Google, I'm not sure what its multiple is, but I'm guessing it's probably over 60. Why? Because it has massive profit potential. Facebook, I don't know what its multiple earnings is. It's not even a public company yet, but it's trading at 52. It's worth 52 billion. So its multiple would be in the hundreds. Why? Because it has rampant growth opportunity. Twitter, rampant growth opportunity. The more stable a business, come like BHP, someone might be able to tell me the multiple. I'm going to take a guess. It's probably 16, 17, 18 times at a guess. Maybe a little bit higher because that industry, a little bit higher, but it's fairly stable, growing, but you're not going to get a 60 times multiple on BHP. Make sense? Because it's more stable, continuing to grow. So XYZ's $1 million. So privately, what might a XYZ be worth? What might you get? How many times earnings might you get for a private business? 5, probably max. 3, 4, 5 times. Make sense? It's about what they trade at. Why? That's just what the market is prepared to pay. So that would be worth, let's say it was worth, other bidders are trying to buy this, private companies trying to buy it, might offer three times, $3 million. But what might happen is Eddie Groves can come along and go, look, the banks will loan me as much money as I want, plus I can offer shares to buy it. And he goes, I'm trading at 20 times, I'm happy to offer $5 million for this. And he gets it because no one else can afford to pay that. The other bid is 3 million. XYZ owners go, if he's offering me 5 million, I'm sold, I'm out of here. Happy with that? Now he can do 2 things. He can offer cash, which comes from the bank account or the bank's loaning it, or shares, or both. Okay? So I'm doing a deal at the moment into a mining stock. So I own rural properties, right? I own one of my farms is a $5,000 acre sheep farm. Now, and I've owned it for 4 or 5 years. A sheep farm, yes. A sheep farm, yeah. And I don't like shearing sheep, so I don't do the shearing. But the point is, it has a 300-acre mine on it. Okay, and the mine that's owned by a publicly listed ASX stock. And they've found a large amount of reserves there. It's an old mine. It's now, because things are more higher priced commodities, it's worth money. Okay, so I'm in negotiating a deal as we speak to say they wanted to buy the farm. A lot of mines now want to own the farm. They want to control the access. Otherwise, they have to pay me for access. I don't control what comes out of the ground. That's theirs, but I can charge them to let them in and out and get the stuff out. So they'd rather have control. So, we're in negotiations. Say, you buy the farm off me, I will sell it to you at a price. But you can do two things. You can pay me cash, normal deal. Let's say the farm's worth $1 million, pretty much what it's worth. And you give me $1 million cash, normal deal. Or I will take half in cash, $500,000 cash. The other half I want in shares, but I want 2-for-1 shares. What I mean by that, the other half, because shares aren't worth as much as cash, because the share price can go up and down, I want 2-for-1. So the $500,000 left you owe me I want in shares, 2-for-1 is $1 million. So I'd get $500,000 cash and $1 million in shares in the ASX mining stock, and it's worth 1.5 million all up, and I would consider that deal. Okay. All I said, the third thing you can offer me is I'll take all shares, but 2.5 times. 2.5 times. It's worth $1 million. I want 2.5 million in shares. Making sense? Oh, that would be part of negotiation. I would say, yeah, but probably not all of them. But I'd say I'd want to be able to sell some down, because if they're trading at 24 cents, which they happen to be, on the stock market, I'm not going to say the company, but on the stock market, if they're trading at that on the stock market, if I can sell some, I can go out and sell them. If I come to you, Bruce, and said they're trading at 24 cents, off-market purchase, I'll sell them to you at 20 cents. Who'd be interested in buying stock at 20? Because you can just go and sell them on the market for 24 cents. Because that's what they're trading at. So that's one way you get shares at a discount. Okay, before the credit card, I have a capital raising company, and that's one of the services we did for our members. When the market turns and when more come about, we'll let you know about those. But where companies would come to my capital raising company and say, off-market purchases, or we need to raise more capital, okay? And so we're going to have to offer a discount. This is what high net worth clients get access to, right? So Macquarie does this all the time through their high net worth. So they'll say, okay, you're going to do a rights issue or whatever, raise more capital. You trade stocks trading at 24 cents, you have to give it a discount 18, 20 cents. So we've done this before on some stock, and our clients have picked up stock at one it was 10 cents, they picked it up at 8 cents, 20% discount. We said, don't sell it straight away because they're using the money to buy another company. And once that deal comes through, we know the stock price will go up. That's not insider trading. It's publicly released information. But not everyone follows this stock, so they don't know that information. So don't sell straight away, okay, because we don't want to pump and dump. If we sell you stock at discounted rate, right, and everyone cashes it in, you'll put the price down. So we've got to manage it. And you can only do it in small lumps because otherwise you'll affect the market. And we said, don't sell straight away. They sold it as a wait. And they sold it at 18 to 20 cents. So people paid 8 cents, they sold 18 to 20 cents. We're talking less than 3 months. So they're more than double their money. And is that a good way of making money, by the way? Okay. So that's the investor newsletter, but it's hard to get deals like that. And if we ever get another deal like that, we'll let you know, but it's pretty much you want to be onto it quickly because sometimes you can only take $1 million, say. So it's first in, best dressed. But that's a similar deal to that. So that's an example of how you can use equity or shares because shares are money. So for them, though, what's the benefit of the mining company? They can buy a $1 million farm and all they have to do is issue new shares. It costs them nothing. They just issue $2.5 million in new shares. Boom, they've got a farm that they can go and sell for $1 million on the market. Or they can go and take a bank loan against, the bank will use as security. Who's following what I'm saying here? So it's got to be a win-win deal. Now I'm going, well, the upside in a sheep farm, let me think. Sheep farm or mining stock? What has the greatest upside? Yeah. What has the greatest risk though? The mining stock. Because a sheep farm is positive cash flow and wool prices are going back up and that farm makes, 80, 90,000, 100,000 a year and it could likely double with wool prices going up. So it's going to be passive. But here's the deal. I've said to them, they don't want the sheep, right? They don't want the sheep farm. They want someone to look after the sheep farm. So I said, here's the deal. I'll take a 15-year lease for a couple of bucks a year, and we'll look after the place and continue running the sheep. They want the sheep there. They don't want the place being overgrown and fences falling down. Basically, they don't have to manage it. We'll manage and look after it. So I continue to farm the sheep for 10 or 15 years with that income, and I've got my money in the bank, plus I'm making the income. Who's following what I'm saying here? So that's how you structure a good deal. Then if you get really clever, go, if I've got a 15-year lease, what's that worth to sell that lease to someone else at a discount? If you're a sheep farmer in there and I say, here, this lease is going to be worth, average, say, $150,000 a year over 15 years, that is 1.5, say 2.25 million. I will sell you the lease for $1 million. Make sense? You convert that to $1 million. You turn more thin air into money. Pretty up to me. Something to think about. Would you like to know what the stock is? I'll tell you after I get the shares. So, otherwise it could be considered insider trading. Yep. It would definitely be considered insider trading. So, XYZ, that's why I tell my brothers they're not allowed to trade in that stock. Because we know the farm, etc. like that. If you trade in that stock and you're a related entity, that's insider trading. And you mightn't get caught, but down the track, they can count back years and check all that, and boom. Okay. What's that? Is it the stock? It's only a small mining stock, so it wouldn't be. I doubt it. So making sense? So the point is that $1 million, now as soon as he buys it 5 times. It costs Eddie Groves $5 million in cash or shares or whatever combination. Okay? As soon as he buys that $5 million, we'll put it over here, $5 million business, he's paid for it. It's now that $1 million goes into ABC. ABC's trading at how many times? 20 times. That $1 million increases the value of ABC by how much? 20 mil. He's paid 5 mil for something that's turned it into $20 million in value. He's just made how much? $15 million. Something to think about. Who's following what I'm saying there? Get that? That is how billionaires become billionaires. They are printing and creating wealth. Why does that exist? Because you, if you're a share investor, are a retail investor, and you're prepared to pay whatever the stock price is trading at, whatever, because you believe it's worth that. You think you can make money on the upside. You take that risk. That's how billionaires become billionaires. See, most people don't know that, do they? This is the other side of the stock market, how it's working. You need to understand that to know the value of a company as well if you're going to invest in. But you see what I'm talking about here. You build up a business, sell it or list it. We're not talking making a couple of $1 million. You're talking making potentially tens and tens of millions, hundreds of millions, potentially billions, depending how big your business is. If you want to have a $1 billion business, you'd probably need to be making about $65 million a year. That's a pretty decent sized company. At, say, 15 times, typical earnings would be worth $1 billion. So it's a pretty solid company. If you want to be worth $100 million, you get a company that's making $15 million, okay? Or no, it'll be less. 100 million divided by 15, $6.5 million. Yeah, the requirements depend. I mean, you have to have a shareholder spread. I think it's about 400 or 500 shareholder spread. There's not a lot of requirements. Just go on the ASX and they'll have the list of requirements there. Generally $2 million in value or market equity. So there's not a lot, but it's costly. You're probably looking at 300, possibly up to 500,000 to go through a listing process, and then you might be looking at 100,000, 200,000 a year in cost to maintain an ASX company. So it's cost prohibitive. But a lot of companies do it. They want to raise capital or merge or etc. There's other ways to do it. You can do publicly unlisted. I have some publicly unlisted companies which we raise shares, etc. It's still a public company. It's just not listed yet. Okay, but you can still trade shares in it. Or there's secondary tier markets like ASOB, etc., where you can trade shares on the secondary tier market. So there's ways that you can still do that. Or Facebook is a secondary tier market. I mean, Facebook's not listed yet, but people buy and sell the shares, a maximum 500 shareholders, okay, which is sort of being stretched a little bit. And that's got a value of 52 billion because of trades, off-market trades. It's not listed yet. So you can trade in private companies as well. There's a lot of private companies in Australia that are much more profitable than ASX companies. I mean, my companies are much more profitable than half the companies on the ASX, and they're private companies. So there's some small cap public companies that are just not good. They're just small, not really doing it. I don't know why they're even on there. Okay. So, making sense? That's how you become a billionaire. So what Eddie Groves did, he bought. He bought 2,600 childcare centres, biggest childcare operator in the world. Started from Brisbane. And then it'll come crashing down because their profits had to be restated. They'd overinflated the profits, and now I think they're in a little bit of trouble because they basically dodged up the profits. They were margin lending. They had margin lending. So when the credit crisis hit, how hedge funds were targeting these sort of companies that had director shares, and they knew if the share price got down to a certain level, the banks would call in margin loans. The directors would have to pop up more money, and they didn't have it. They'd have to sell their shares rapidly, which they knew would drive the share price down. So deliberately some of these hedge funds would deliberately put rumours into the market, say a company's going broke, to send the share price down. So it would cause a margin lend, which then would be a self-fulfilling prophecy. Then people can't buy the shares, haven't got the money to put up for the shares, the share price would crash, and the company would go broke. Okay, so the market can be, and the ASIC come out with a law to try and stop that. Basically say you're not allowed to spread rumours. But how the hell do you police that? I don't think they'll be able to charge anyone with it, because how do you police what's a rumour? Like, what if Bruce said something to me and I was just innocently talking to you and said, I heard this. It's like, am I going to go to jail because I told you something that's actually a rumour and you heard it off someone else? Who's actually spreading the rumour? We didn't start the rumour, it's gossip. So it's a very hard thing to police, but they're trying to stop people deliberately starting rumours to affect the company's stock price and then try and trade against it because it affects the integrity of the stock market. Does it happen? All the time, okay? They did nail some people on Hot Copper and some of those forums for deliberately spiking a rumour either way to send a share price up or down and then offloading the shares, okay? It's just like anything. If you get too big, like if Rifkin report when he was alive, it got so big it was starting to affect the market because so many people were following the trades. So then ASIC has issues that if our investor newsletter got too big, we would have to be accountable and we could possibly not have to be able to do it. Because if, let's say we had, we have 250,000 in our database and we did a stock recommendation and a lot of people bought the stock, that would drive the share price up. It could start to affect the market and you can't, that's when regulators have an issue with that because you've got to try and keep the market, ethical or transparent. But the markets, we know, are manipulated to a certain degree. That happens in any market. It's hard to stop it completely. Making sense? It's pretty much how it works. So that's how, an example how Eddie Groves ended up being worth about $140 million, but then it come all crashing down. And then he sold a lot of his properties to fund a margin loan and he crossed that line. Remember we talked about keep your personal assets or your trust assets separate to your business. He undid that line between the two and he lost a lot of wealth out of that. And now he's obviously got ASIC charging him or making allegations to take him to court, charging him civilly, possibly even criminally. If it's doctored that they were seen misled the market deliberately, then that can become a criminal charge. So that's where directors have a lot of responsibility. Okay, and that's why they lie to the market or whatever, they'll go to jail, especially in this country. Okay. Making sense? Okay. Does anyone have any questions on how to become a billionaire? Just curious. Any questions? Sounds like hard work. It is a bit of work into listing a company, or you can sell a company. So let me break this down. I forgot to cover. Okay, so let's do this. How can you relate to this if you're not going to build a big business? Here's what a 21st century member did. Well, the 19-year-old, what he did, he built an internet business. He partnered with my ex-CEO and two other people. They put 4 internet businesses together, and then they tried to sell them. Now, the best people to sell to is a public company. Why? Just like that XYZ childcare centre. If they're going to sell to a public company, they're going to get a higher price because public companies were looking for acquisitions. Remember, they want to grow. So a particular large media company in Australia, well, not a large media company, but a digital media company, I won't mention the name, it still exists today, they were looking for acquisition. And so they found them and someone else interested in buying. Once you get 2 buyers, potential buyers, you can get a bidding process going and put the price up. So they sold their internet companies to the publicly listed company. He got $10 million in shares. He got it paid in shares, okay? And the shares went up to over $20 million before the credit crisis, okay? And then he was locked in. Often you're locked in when you sell your business for 3 years. You have to keep on working the businesses. If Bruce buys my company, you want to make sure my company continues to perform for at least the next 3 years. So they lock in the owner, handcuff them to continue to work and perform, and a buyout, earning buyout, so the company ideally continues to perform. Make sense? Too much risk. Key man risk. So, making sense? So that's what they did. Now, on a small scale, how does this work on a small scale? Another 21st century member, he learned our internet and business strategy, and that what he did is he started internet business with another member. 12 months later, that business was doing quite good, a subscription-based business, and he decided to sell out to his partner, the other 21st century member. He got $250,000. Not bad for 12. Once again, because if I had an internet business worth, well, put it this way, let's say you had an internet business making $50,000 a year, and I said, I'll give you $100,000 for it. Who'd take the $100,000? Who'd be open to the conversation? 150, who'd be open to 150. 200,000, who'd come for a discussion. If I said, here's a check for 200,000, I want to buy your internet business that's making 50,000 a year. Some of you'd want more, don't you? Some of you want 5 times. 250? Come on, let's be honest. But you'd say, if you've got a website that's making 50,000, you think it can make 100, 200,000 a year, you'd go, well, no, I'm going to sell it for that. I'm going to keep it and maybe sell it later. Or can you sell off part of it? Say, I'm going to take some money now off the table, 20%, which you can do, a cornerstone investor, which they might bring expertise in, or a database or JV, and be able to help you grow the business. That's why a lot of companies take a cornerstone investor in. One that not just has money, but has expertise or synergies with their own companies. Okay, and then they can help grow that. And that's what I've done, is sell 20% of a particular stock of a company, so I can bring in capital and I spread the risk, okay, or bring in a key person. But generally, I maintain full ownership of most of my companies. But so the price would depend on where you think that's going. You know that's onto something and growing, it'd be worth more and more. Okay, so on a small scale, what you've learned here this weekend with the internet, etc., what Lou talked about, and there's a lot more to learn about internet marketing. The freemium model is all what it's all about, building a scalable business. You can see it's not just the income you can earn, you can sell these businesses. Part of them or all of them. You can start to replicate and do exactly what the billionaires are doing. If you've got 5 times that, $250,000, you're not a billionaire, but who would be happy with a result like that for being an entrepreneur, and that's something you might build part-time and takes you a year or 2 to do? That is good money. And that's what you can start to do. That's the potential of what is out there. So it's not just the income, the 4,000 or 5,000 a month you might make off your internet business. It's what are you building here? What can you sell this for? What is possible with it? Because that's the times earnings is where the money is. Repeat after me. Something to think about. So I'm going to take a couple of questions. Yep, fire away.
What if it's not making money yet? Because it might be a business.
Yeah, some are still worth something. Even if, so the question is, what if the businesses are making money yet? Is it still worth something? Okay, well, look at Twitter. What is Twitter worth? It's worth between $8 and $9 billion this last truck. It's not publicly listed yet, but off-market transfer of shares, $8 to $10 billion. It's not making money yet. So, yeah, they've built a database and it has the potential. It has the potential to make money. Does that make sense? So you don't always have to make money. Facebook is only recently being started to make money, but for a long time it was still valued at 10, $15 billion and hadn't made money at that point. Why? Potential. Plus, it has a pretty significant database. Someone's going to say, I don't care. Companies will come along. YouTube was bought for, I can't remember now how much money, off by Google. Something like $6 billion many years ago. And it wasn't making money at the time. But they believed they could monetize, and they now are actually monetizing it. It's now actually making money. So MySpace, Murdoch, bought that for $600 million. It was valued at one point about $6 to $8 billion. He tried to offload it, which he should have. Now it's worth. It's not making. It was doing about $1 billion in revenue, but it's dropped. Or that whole company that owns it, but it's dropped down rapidly and it's going backwards. So that's a declining asset now. Okay, and will he get more than his $600 million? When he made that play, it was a pretty good play, $600 million. And MySpace was dominant back then, remember. In America, that's all people talked about. Facebook wasn't even around hardly. But he needed to offload that, and he didn't offload it, couldn't find a buyer. So making sense? So potential. And that's what we talked about. Zynga, or whatever that company is now, is the hottest new internet company that has Farmville and those online games that's making an absolute fortune. So you don't necessarily, the freemium model is about building scalability. If you build a large database on the internet, it's worth something. Scalability is worth something. Why? Because other companies, you mightn't be able to monetize it. Other companies go, if we had that asset, that many clients, we could pump our other products through it or do synergies or get market share, and we could make money out of it somehow. okay? That's what it's about. So it's not even having to make profit yet. And that's where Facebook said, let's not worry about trying. They could try and turn 10,000 users when they started into $1 each or $5 each and make 50, 100 grand or 500,000 a year. They would have killed the business. Mark was like, no, just keep it growing. Keep it growing, go on faith. If you build it big enough, it gets scalability, then we have something here that's not only worth a lot of money, but he wasn't motivated by money either, remember. But he realized, even though he'll still say that, people think I'm not, I don't care about the money, I'm still an entrepreneur. I have to make sure that, I wasn't just building it because I was neglectful of money. He realized if you did build it, it was a good money strategy. It would be worth more, and it's proven to be true, okay? Makes sense? Okay, we're going to wrap up now. Any other questions? Yep, fire away. We'll just get a microphone, yep.
On Friday, you mentioned that you might be able to cover about when you're looking at a business to acquire, what you look for or look out for in the P&Ls.
Yeah, what I mentioned, I was going to get Arj. I don't know whether Arj covered anything on P&Ls or we didn't get time to get into details. I was going to get him to mention about that because that's probably a whole workshop we can go into on that. But if I'm looking at buying a business, obviously if you're not good at looking at P&Ls, accounting's not my strong point. I would use someone like an Arj or an external accountant to come and look at those things for you. But the things I'd be looking for in a business, obviously, I'll be looking at what's its real expenses. Okay, what's its profit if it's making profit? And you're looking for abnormalities on the profit and loss statement, so with things that don't add up, or how much the owner's taken out that add backs as well, so it's real profit or what's been taken out. Because people always try and present figures that look good. So you want to, if you can't understand them properly, then you want someone to double check them, and a good external accountant or someone that's good like that, someone like Arj, would be able to look at the numbers and go, well, this doesn't sort of add up. But you're looking for the expenses. So how can, if I'm buying this company, if I bought it, how much could I lower the expenses? One, by moving them into my own offices, or some of the staff we won't need because I have existing staff that can do those roles. By merging synergies, that's when companies will merge like that. They'll get synergistic benefits of cost cutting, so it's worth more to them. You'll be looking for the hidden assets. Like what I talked about, the example of the media company I bought with the magazines, etc., was what is the hidden assets? Because I could see, well, they don't recognize the assets, but when I own it, I can see the assets. I'm going to monetize that and turn it into more money. So it's going to have more value. Therefore, I can afford to maybe pay more than someone else because I see what its real value is. Or it has a synergistic benefit to me where I can make money off it in other ways, so it's worth more to me. So you're looking for those things in a business. Then you're going to say, well, can I get it for vendor finance? Do you have to pay cash for it? So I just bought a company last year, an education training company in New Zealand. So I did that on a vendor finance deal. I didn't want to pay the money up front fully, so I just paid it over time. It protects my risk, and I got a clause in there that if it doesn't perform, okay, then I have some way of minimizing my outlay. Okay, so vendor finance is a good way to buy a business. Not all vendors will sell it to you that way. Also to sell a business. It's a good way to sell a business. It makes it easy, opens up the market to more potential people. So I was talking about yesterday with the magazine titles. So that's easy to sell because I provide vendor finance. So someone doesn't have to have $250,000 to buy their own magazine business. They can pay it off over time and they can start making money straight away. So it opens up the buyer's market of people who can afford that. Yep. Any other questions? You know how to be a billionaire? Okay, you've mentioned that. We're actually filming this event this weekend, so if you wish to have a copy of this, it'll be $4.95. It'll probably take, how long will it take, Peter? Probably 2 to 4 weeks before, say 4 weeks, 3 to 4 weeks before it'll be available, and that can be shipped to you. But if you do want a copy of the whole 3 days as a home study and audio, then that can be made available to you. That will be sold for up to $5,000 as a home study. It'll go out after you want to buy it. You let them know before you leave. You get it for $4.95. Then it'll be emailed out to the database for members, for 21st Century members, for $1,000, and non-members will pay more for that. So it's, if you do want to go over all this material again, that will be available to you. Anything else? Last chance to ask questions. Anything I maybe haven't covered you'd like to know? Or you pretty much know everything you need to know now, or at least enough to take massive action. You can always come back and learn more. Yep.
Can I on-sell the DVD if I buy it for $4.95?
Go onto Facebook and Jenny, you could if no one found out about it. No, technically, if you own it, you can probably. I'm not sure. Speak to my lawyers. What I always find funny is on eBay, people sell my book for like $1 or $2. They go and get it for free offers, right? And don't bother reading the $30, $5 book, which should make them a lot of money. And they try and sell it for a couple of bucks or $5 or $10, trying to make money out of selling the book instead of actually reading the book and actually making millions. Okay, so, but everyone is after a quick buck. So, any other questions? Anyone want to share what's been your best thing? What's the best thing you maybe learnt this weekend?
For me, I just think it's amazing to see all the supporting businesses that are out there and having the opportunity for them to come in to the one space for us is just incredible because, might not be ready for some things or everything now, but there's always a stage to open up to. So it's fantastic. Thank you.
Yeah, you're welcome. Give her a hand. Anyone else want to share? Best thing they've learnt? We'll go right over there.
One of the biggest things I noticed was out of most of the speakers, the foundations of everything they do are similar to a degree, but they have to be done properly for the business to go ahead. It was absolutely a must.
Yeah, very important. Give me a hand. Okay, one more. Yep, fire away.
Also knowing the values of the billionaires and then knowing that some of my values are actually similar to some of the values of the billionaires and then, being aware of that and listing five of those top things. And, I can see myself growing and my business growing rapidly as well as a result of that.
Yeah,
So,
it's very important.
yeah.
Fantastic.
Thanks, Jamie.
Give me a hand.
Thanks.
Yeah, understanding the values and understanding when you meet billionaires, most of them are very normal people, okay? There is people that I've met in Australia that have become billionaires and you wouldn't even know them. They're just knockabout blokes, down to earth, but they've tapped into a strategy. If you look at someone, I've shared the story before recently, but where I grew up in northern New South Wales, near a town called Glennis, as a young guy, grew up just near there, 45 minutes away. His dad told him to leave town at 18 because otherwise in a small country town, if you don't leave town at 18, you'll probably end up staying there. And so he followed his dad's advice. He was hopeless at school. He was working in a car dealership. He said, you either stay working in a car dealership or leave town and go and make something of your life. So he left town, headed to what's called Hunter Valley, started working as an electrical apprentice in the mining industry. And on the side, he started to, young age, started to build up a side business because he realized he could contract a service maintenance work to the mines as well. So he's working in the mines and had a service maintenance business on the side. He built that up, bought a house, started paying off his house. And then at 28 years of age, he had this grand ambition, this dream to buy a coal mine. Because he figured out at 28 years of age working in the mines that he wasn't going to make billions of dollars working in the mines. The people that owned the mines made all the money. So he thought, why don't I just go and buy a mine? Well, the cheapest mines around are usually $30-odd million and upwards just for a mining lease, let alone to build the mine. So it was a pretty ambitious goal for a country boy at 28 years of age. But he had a dream. And he was willing to entertain a new what? Idea and take massive action and believe in himself. So he didn't just talk the talk, he actually walked the walk and did something about it. He found a mining lease that was available for sale in Queensland. And he put an offer in, and they didn't take him too seriously because, one, he didn't have any money. There's about 20-odd other companies tendering for this mining lease to buy it. Eventually, none of them could fulfill the deal, and it fell through. So they eventually considered him because they said, why did they consider him? One, he was, even despite he was young, was that he was so goddamn persistent. He kept annoying them, wouldn't go away. So he pursued this dream for 2 years, had no money. But he realized you don't need money to make money, do you? Because money is just an idea. You need creativity, you need passion, you need focus. So he didn't know that he didn't have the money because the idea is good enough, the money will come. So as a result of that, he decided to go, he realized to negotiate, to try and buy a mine, you need to probably have some top law firms behind you. So he went to Sydney and knocked on the door of law firms, eventually convinced the law firm that here's the deal. I have no money, but I want to buy a mine, and if you agree to work with me for at least 12 months, no charge, when the deal comes off, if the deal comes off, I'll pay you double the legal fees you normally earn. And this was a top tier law firm, okay, or second tier. And they agreed. Why? When you're in a state of absolute certainty and convincing, they actually, so this guy actually, they're willing to take a risk because he was so convincing, so certain that he could pull this deal off. He had no other certainty other than the certainty that come from within. So as a result of that, he was able to get them to work and negotiate. After 2 years of negotiating, he was able to do a deal to buy this mine for $30 million, mining lease. Had no money, so he did deal vendor finance. Very good strategy. Vendor finance, $1 million deposit, $29 million you got to pay later. Six months later, pay another $7.5 million or something like that, or another $6 million, I think it was. And then in 24 months, pay the balance, $22.5 million, whatever it is in the balance. Making sense? But the $1 million is a non-refundable deposit. Now, would this test your commitment? You don't have the $30 million, you don't know where you're going to get it from, and you've been working 2 years outside of your job to come do this, and now you've got to come up with $1 million, which you didn't fully have. He had to sell his house, sell his service maintenance business on the side, borrow, and come up with $1 million. Now, see, most people, they would like, how committed am I? Put $1 million. And remember, this is everything on the line. This $1 million, if he doesn't find the money, he loses. Non-refundable deposit. He's got 6 months to come up with $7.5 million, and then another 21.5 million by the end of the 24 months. So he decides to commit. Is commitment important, yes or no? Not just talk about it, not pretend to be committed, but he's now committed. Do you think if you put $1 million down, it's everything you've got and more, that you're going to follow through, yes or no? He now has burnt the bridges. So he goes, knocks on every stockbroking door in Sydney. Every stockbroking door in Sydney, they all basically say no. He comes across a small stockbroking firm and he's able to convince them, okay? Because not only does he need the money to pay off the mine, before that he needs $2.5 million to drill test to see if the mine's worth anything. Without the $2.5 million, which he doesn't have, there's no drill testing, nothing. So he needs $2.5 million to drill test. So he raises $2.5 million because he convinces the stockbroking firm that, basically the owner of the stockbroking firm said the only reason we believed in him is we thought either this guy is a complete idiot or he's onto something. And so because he was so certain. And they went out to their 60 of their stockbroking clients and collectively raised $2.5 million. They drill tested. After drill testing, he was right. He had a hunch. He'd worked in the mining industry, knew where coal should be, etc., coal mine, and that it should be. So he had a hunch. He believed there was a lot of coal there and it was worth a lot more than $30 million. He saw the value in that. And after drill test it, boom, the lease is worth a fortune. It's got a lot more coal than they expected. Now to raise money is much easier. Once you have that drill test and you report it, now this is before the credit crisis, Chinese investors are buying up everything. He's able to raise the money. So, but after we're able to raise the money, etc., so he's able to buy the lease. But now his partners, the stockbroking firm and the people who put the money in, they want their money out. And he doesn't want to sell because he's bought this for a long-term play. He sees the value in it. But he doesn't have the money to buy them out. And so what happens is they get offered, the mining lease gets offered to be bought by another company, bigger mining company. Okay? And they offer $8 a share and only some in cash. Remember, when you're buying companies, offer some cash sometimes, some shares. So you got offered some cash, some shares. His partners wanted all cash. But he didn't want to cash out. So he let his partners take all the cash and he just took the shares. But to buy the rest of his partners out, he needed to then borrow money. So he went and borrowed money to pay out the rest of his partners, which is a very good play. Okay, the $8 a share offer valued the company that he paid $30 million for at $170 million. So something he had nothing, it was now worth $170 million, but it didn't stop there because that $170 million, he'd be happy with that, by the way. That's not a bad play. He's got $170 million in stock, in shares in a big mining company because that bought out the company. And then he borrowed to buy out his partners and increase the amount of shares he had. $8 a share it was. That particular company went to $20 a share. His $170 million turned into $440 million. He got a phone call from his stockbroker one day because it was on the market for the shares, obviously sell the shares. He got a phone call saying, we have an overseas buyer for your $450 million in shares. And the very next day he had money, $450 million in cash banked into his share. 28-year-old kid, in a small country town near myself where he grew up, and at 32 years of age, he was now worth almost $500 million. Is that amazing? The moral to the story is, one, people say, oh, he was lucky. So, well, is he really lucky? He put himself in a position where luck could work for him. Well, what is he lucky? Well, let's see what he did again. He did this again recently, and he did it again on another mining lease, and he listed that company last year. That company was called Aston Resources. He had listed for $1.2 billion. He owned 30% of it, which means he made another $400 million. Aston Resources is expected to be valued at $2.5 billion very shortly, so his 400's turned into $800 million on top of the $450 million he made before. This guy is pretty much a billionaire, 34 years of age. Does anyone know who I'm talking about? Nope. Hardly even know him. The guy's name is Nathan Tinkler.
Is that the guy that owns the team, Newcastle?
He just bought Newcastle. Yes, just bought Newcastle, and he's very big in the horse racing. The VCR doesn't like him here too much because he's country boy, bit rough and rugged, and they're a bit pretentious, poshy. You know, I love the spring racing carnival, but some of those we need a Facebook revolution to clean out those old fuddy-duddies that make a mess and mockery of the horse races when it belongs to Australia. We're not some upper class elite. We are Australians. That's another side issue. But the point is, he upset him because he's poured $150 million in the horse racing industry. Whether you love him or hate him, the guy has some courage, and he's a country boy that his dad told him to leave at 18 because otherwise, if you don't leave then, you won't leave the small country town, which is pretty true. I left at 18, 19 as well. Same reason. I didn't want to stay on the farm. Nothing wrong with that. But the point is, that's how a guy become a billionaire. Some courage, commitment. Most people won't commit. They won't follow through. But he was going to keep on knocking on doors to raise the money. Why? He's going to lose $1 million if he doesn't. Where other people go, oh, this is too hard, this probably won't work. You know, he didn't know it was going to be worth that much. He was going on, going basically faith. But he was backing his gut instincts, and he recognized value, adding value. Did he add value? He recognized an asset he could buy for $30 million that was worth $170 million to become worth a lot more. Okay, and then to say it's not luck, he went and did it again. So the critics have said, you're just lucky. Well, he just went out and did it again, and he'll probably do it again and again. Why? He is a financial engineer. He didn't know anything about this when he started. He had to learn himself. Amazing story. That's in Australia. That's happened in the last recent years. So I'll close with that. It's been great sharing with you this weekend. This is the first business academy we've ever done. In the future, what we'll be doing is we have an internet and business academy, which is a slightly different program, more internet focused. What we'll be doing is combining those programs, so it'll become a 3-day program on business like this, but also a lot more on the internet. So we'll have half of the program on internet speakers, the rest will be just on business. So that will be held once a year in Australia. The next event, if you want to come to it, will be in Brisbane, June, July this year. They'll let you know about it, and also in Auckland, and then some of them will be done overseas as well. So, but if you want to get this on home study, you're welcome to order that, and they'll send it out to you. I hope you enjoyed it. It's been a pleasure sharing with you. Being an entrepreneur, I love helping other entrepreneurs. Sharing about this is a passion to me, and being a pilot program, I want to cover as much as I can. It's probably in a no sequenced order because that's the way it just comes out, etc. But really, there's so many ideas that you can take advantage of, probably more than you need right now. And you just get out there and take advantage of it, and then you're welcome to come back to some of our other events. So give yourselves a huge hand. And I love to hear your success stories. So Facebook me or shoot an email, but keep me updated of where you're going, etc. And people will be happy to hear. Yep. If you want to have a photo or come and say hi. Yep, and testimonials. Yeah, we'd love to hear some testimonials. So if on the way out, if you see Goro, if you're comfortable, just quickly say what you thought of the program, what you loved about it, because I'm sure there's a lot of other people out there. Think about in this country right now, how many entrepreneurs or would-be entrepreneurs are struggling, and they just simply don't realize the wealth of knowledge and what's available that could help them in their business. And they'll go through life, most of them living a fraction of their full potential, simply because lack of knowledge, lack of education, and that's available. We want to make sure we reach those people and help this country become even richer. So enjoy. We'll see you soon.